we have a lot of bad things coming up. You could end up in a depression of the 1929 variety, which would be a devastating thing. Took many years, took decades to recover from it. And we're very close to that.
So is former President Donald Trump correct when he warns that we might be headed toward another Great Depression under the Biden-Harris regime? Should we just call it the Harris regime now? Last week, Japan's stock market collapsed, which is what triggered such talk. Things have since started to recover. But is this a blip or the beginning of the end? A Wharton economics professor recently went on to CNBC to demand radical rate cuts to avoid a collapse here in the United States.
I'm calling for a 75 basis point emergency cut in the Fed funds rate with another 75 basis point cut indicated for next month at the September meeting. And that's minimum.
Now, there's a statement from July 31st from Jerome Powell that reads, Federal Reserve Chair Jerome Powell didn't say much on Wednesday, but he did manage to mention that an interest rate cut will be on the table in September. Many financial experts are now predicting there's about a 60% chance of rates falling further in November. The odds on another lag down around the holiday period are about the same. Our friend Dowd recently tweeted that, quote, the Fed always breaks something in a rate hike cycle. Looks like this time it broke a central bank, the Bank of Japan. And joining us now is none other than Dowd himself. He is a financial expert. He is with Finance Technologies, as well as the author of the fantastic book Cause Unknown, The Epidemic of Sudden Deaths in 2021 and 2022 and 2023. Ed, I've been waiting to hear from you because I keep hearing competing theories from, different people, all involved in the finance world in some way. Some are more positive than others. Are we, like Trump suggested we may be yesterday in his presser from Mar-a-Lago, headed for another depression?
Not sure about that, but what I am sure about is we're headed for economic recession. We don't know how severe it's going to be. Our economic indicators started rolling over again in March of this year after the government saved the economy last year with deficit spending. The juice from that bounce never got us into expansion territory, and now we're rolling over again. So whoever inherits the economy in the election is going to be facing a recession. Additionally, myself and others have been pointing out the Bank of Japan as an issue since the fall of last year. It's been an issue we've been watching, and finally it gave up the ghost and broke last week. And the reason it broke is because the Federal Reserve raised interest rates after basically 14 years of zero rate policy to 5.5% in a very short time frame. And every rate hike cycle, there is a contraction in credit, which began in November of 22. It really starts to hit the real economy 18 months later, which was May of this year. So what we're seeing is a problem in Japan that was caused by this interest rate differential, which caused the Japanese currency to start to depreciate to levels we haven't seen since the 1990s. So the Bank of Japan had a Hobbesian choice before them. They had to save their currency or continue to have zero interest rate policy. They chose to save their currency, and last week raised their benchmark rate 25 basis points. That then blew up what is known as the yen carry trade, which has been basically a free lunch for speculators and financial institutions for decades, where they borrow in yen at zero interest rates and then invest in other securities in other countries and other currencies. So this is one way that the global debt bubble has been financed, and that just broke. So now what am I saying? We're on global sovereign debt bubble popping watch. So it's begun, and the knock-on effects are going to take some time. So we're expecting a correction in the U.S. stock markets into October, which favors Trump. Then there'll be a policy response by the Fed. The Fed is loath to lower interest rates right now. I think on your show last time I was here, I said, when you see the Fed start cutting, run. So they don't want to start cutting because they're going to signal to the markets that they are in panic mode. So Jeremy Siegel came out and demanded 75 basis points of emergency rate cuts and another 75. Then the Fed came out on Monday and basically said, we're going to wait for more data. He then walked back that statement, and now he's saying, no, we don't need any rate cuts. The Fed shouldn't cut, because I think he got tapped on the shoulder and was told, don't stoke panic. So the clock has been set, and we're on global sovereign debt bubble popping. It's going to take time to unfold, and a depression would come after the election if it comes at all. We don't know what the policy response by the Fed would be yet when it comes, and we don't know what whatever new administration would do to try to stem what would be a very, very nasty financial problem.
So, but you do think that the Fed will do a rate cut in September? That's the expectation.
That's the expectation. They might do it. They won't do one before September, because that will signal panic. In any event, I think the technicals that I'm seeing in the stock market favor Trump at the moment, because it looks like we have a cycle low correction coming in October. So right before the election will be the most maximum amount of market financial insecurity.
You know, it's interesting. I was talking to a financial analyst, not mine. Okay, I'll clarify that. Just, you know, someone who's an acquaintance, and we're talking with one of the big companies, you know, I won't mention their name, but with one of the big companies, and suggesting that, oh, you know, everything's fine. You should get in the market, stay in the market. But it sounds like that could be good advice for the next couple months. Well, maybe not even a couple months though, really, right? I mean, I know you're not giving financial advice on the show, but it's so interesting how I'm hearing such different takes.
Well, let's look at what Warren Buffett's doing. He's raised the most amount of cash he's ever raised. He owns 4% of the T-bill market at the moment. 4%. He owns more than the Federal Reserve in T-bills. T-bills are the safest financial instrument on the planet. He expects some sort of financial turmoil to come. He's not playing for a 20% pullback in the stock markets. He's playing for blood in the streets, and he's not going to get the timing exactly right, because he's got billions and billions, so he's early, but he's telling you what he thinks is coming. I happen to agree with that viewpoint. I've been suggesting to people for the better part of a year to raise cash in their portfolio, because when this sovereign debt bubble does burst, there's going to be issues, there's going to be financial turmoil, and there will be policy responses, and there will be a rally from those policy responses. But after that rally, then we'll see what happens. But that is what Warren Buffett's playing for. So
in the event of that, where will will prosperity go if the U.S. economy kind of goes into a downturn? There's this post on X saying that foreign investors in particular have reached a saturation point in U.S. equities, resulting in some of the most extreme valuation disparities compared to businesses in other parts of the world. So what do we expect to see in regard to prosperity if that happens?
Yeah, prosperity will be under assault. And there's been about a decade-long move into U.S. equities by financial investors. And these trends, while they tend to last a long time, when they reverse, they'll reverse in the last, multiple years, anywhere from 2 to 10 years. And depending upon the speed of the outflows, it's going to be a headwind U.S. investors are going to face in the coming years. So the valuations of the U.S. stock markets compared to the rest of the global stock markets is absurd. So valuations tend to mean revert. And in addition, a economic downturn and a global sovereign debt crisis will help that along.
I do want to switch topics with you for just a little bit, because there's been all this news about X and GARM, the global alliance of responsible media, right? I might not have gotten that perfectly right, but as someone who's been in, business or is in business, and also has found yourself on the less favorable side of the industrial censorship complex, as I have, right? I want to get your take on it, because since X announced its lawsuit, the World Federation of Advertisers, WFA, has reportedly informed its members that it will be discontinuing activities for a global initiative just days after Elon Musk and X sued it on antitrust grounds. They also said, we've tried being nice for 2 years and got nothing but empty words, is what Elon Musk said, saying now it's war. And on Thursday, in response to the WFA's move to discontinue GARM, he asked, what are they hiding? It sounds like the WFA has gotten nervous.
Absolutely. This is classic. Elon Musk and others that are suing under antitrust law also probably have a RICO case. And this seems like a classic, let's shut it down and let's destroy the documents. So these people need to preserve their documents. Seems like a cover up in process. And I think Elon and the others suing have a very strong case. This is obvious to me. The mere fact that they're shutting down a week after the lawsuit is all you need to know. It's prima facie evidence of wrongdoing, in my humble opinion. As a stock investor, we see this kind of activity a lot in the markets, and you don't need to wait for the courts to tell you what's going to happen. And in my humble opinion, they're already guilty.
Yeah, absolutely. And talking about a RICO case, we'd see if you get an attorney general would actually be brave enough to take it up. But, we'll see, or an attorney prosecutor. Thank you so much, Ed. We will see how these things progress. You have been spot on with the market thus far, so I'm going to keep my eye on October.
You got it. Thank you so much, Emerald.
Thanks, Ed. Up next, an unlikely indictment from the Department of Justice. The 4 executives from voting machine company Smartmatic have been indicted. Why and what's happening here? I'll describe it after the break because I probably know this about as good as anyone at this point.